we go. Okay. So let me just share my screen here too. So the candle body, the beginning of every candle lines up with the end of the previous candle. So basically you can see where these two candles lined up. That's the beginning of this candle and the end of this one. So since the end is down, the beginning and the end of the candle are the candle body. So that means if I'm looking right now at a 1 hour chart, if we know that the end, and this is 95% of the time, by the way, that the end and the beginning match up. Sometimes they don't. So that's another story, but most of the time they do. So if I know that the beginning of this candle matches with the end of this candle, then I know that this is the end. So that means that this one, the top is the beginning of this candle, which lines up with the end of the previous. Now this one specifically printed blue, or in traditional cases, it would be red, because the price ended lower than where it started. And now the wick means that the price traveled that to that level in the course of that 1 hour time period. So each of these candlesticks is 1 hour. So if we go to the current one over here, we can see that there's 35 minutes left and it's still moving up and down. But the beginning of this one lines up with the end of the previous. And so this one is white, or in other cases, it'd be green, because it ended higher than where it started. And then over the course of that 1 hour, the price went up here, but it didn't end there, it ended down here. And over the course of the hour, it also went down here, but it didn't end there, it ended up here. So this one lined up, and so far we have 35 minutes left. So it's a rule with trading. We never, ever, ever, never, ever, never, ever, ever, never make a decision on a candle that's still currently printing. So in this case, if we're going to make a charting decision, we have to completely ignore that one. So in this case, where this chart, what this chart is doing, I wouldn't want to make any type of decision until this candle closes. So we'll wait until that happens, make a decision there. But yeah, I mean, that's basically the layout of candlesticks. So we can see down here, we have the time, and here we have the price. We're looking at gold. So this means that right now, the price of gold's hovering. I can bring this up to show us. It's 1865.95. It's going up and down, up and down, up and down, up and down. And so, yeah, this is in dollars also. Now with currency pairs, I mean, with everything else, if you're looking at stocks, like it's going to be just like crypto or whatever, right? You're going to be looking at it usually denominated in US dollar. So if you're looking at the S&P 500, you know, if it's whatever price it's at, if I go to SPX,
SPY.
Yeah, SPY is like it divides it by 10 or something, right?
Got you. Okay.
So if I go to SPY, see it's 391. So it's like it's the same thing. It's just a small share of it. But yeah, so what was I gonna say? Oh yeah, well, this is obviously denominated in dollars.
We are in a recession.
I mean, we haven't traveled down, like let's compare it to 2020 to COVID. We dropped down by 11,988 points.
35% there.
And right now we've gone 9,700. So
20% on the market.
Yeah, so we would have to come down to 360, 350 level to match COVID prices, which if you look at it is actually kind of cool, because if we draw this line here, we can see that we hit that as resistance. And so I would imagine that that would be a beautiful level to buy. Could come down a little lower, but even I'm not saying that that's going to be, we're going to bounce and go higher from there. I'm not saying we're not going to do that though. It's possible. But what I am saying is I do believe that at minimum, we'll probably bounce up there for a little bit, and whether we go up higher or we go down lower, I still think this would be a good a good buy. So I think we'll bounce here and either go up or bounce here and go, still go up though. The downward movement is more likely because look at how quick COVID crash was. Boom, came down quick and then came up pretty quick as well.
Yeah.
This has kind of been slow chop sideways and not coming down nearly as fast. So we're looking at a weekly chart. This whole drop was over the course of 1, 2, 3, 4, 5 weeks. 5 weeks, and then we started heading up.
Mhm.
We've been dropping now for, oh shoot. Come on, what are you doing? Why are you doing that? Dude, what the heck? Oh, that's why. Just try to use the ruler tool. Just let me delete this. Okay, so I don't know what this is being crazy. All right, bro. Trading view, you're done, dude.
Recommending some janky software.
I know, I'm like telling you how good it is over here. And it's maybe not. Yeah. Okay, so let's go back to SPY. Shift, click. Dude, why is it doing that? It's so crazy.
Like moving the whole screen view.
Yeah, it's not supposed to do that. Okay, so it's whatever. Do it this way then. So yeah, 5 weeks. So let's just count it. Ooh, 5 bars, 5 weeks. People also call them bars instead of candlesticks. And so far, this has been going on now for 20 bars for 20 weeks. So fast is better because the faster it happens, the faster it'll bounce. Slow
Exactly.
is not as good.
Slow means that like it's actually trending
People
in that
are-
direction. Yeah.
Yeah, exactly. So we'll see, but it doesn't mean the worst, but also there's so much opportunity here because you could short it going down so far, and then you can just buy in
Mhm.
at some point. And when something's going down, something else is gonna go up. So
Selling puts for the SPY index.
yeah, so we'll see. So support and resistance is pretty. It's like base level pattern recognition, but we can just draw with the green line, and I'm just drawing where I can see the price kind of paused. And see, this is part of why I don't trade stocks really, because it's like it's just kind of up, it's like it's literally designed to go up forever. That's like what inflation is and all that. It's literally just designed to continue to go up. So in dips, it's like dips, no matter how low we go, it'll come back eventually. So I mean, we'll see, but I don't think we're going slow, but I'm just drawing. We can see we had a clear top here, 155, both in 2007 and in 2000. And then we end up breaking through in 2013. And right here in 2014, 2015, 2016, we saw that as support. Boom, boom, boom. Come right here. In 2015, we saw that as resistance. Right here, kind of messed with it. 2016 came up, and then notice when we dipped COVID 2020, the same area that was resistance in 2015 was where we bounced here in 2020. So this is why support and resistance is important, because we can use it in history. It flip-flops. So this is why Forex is, in my opinion, better to trade consistently, because it's not just, every chart's not just going up forever. There's fluctuations up, down. It's like, it's not as artificial, still kind of artificial, but not as.
You do that makes it hard for predictability purposes.
Yeah, because stocks is like, it's just easy. Just basically buy, and if on any time frame, even if you bought at the very top and then immediately we went into a recession, if you just waited long enough, it all came back and went up higher. So in that case, it's like stocks, it's a lot harder. No, I don't want to say that fully, but I mean, I do want to say that, yeah, because crypto's the same. It's better to kind of make money long-term investing, in my opinion. in
Stock
stocks.
market, yeah.
Yeah, and it's a little more difficult to make that. If you want to just jump on and make like, oh, hey, I want to jump on for a few hours and make a few $100. Like, you could do it in stocks, but it's a lot easier in Forex.
Mhm.
A lot easier because the patterns are way more consistent and it's not as much speculation, I would say.
Mhm.
Stocks are more speculation, like
That's
something
true.
like
Options can be
Tesla.
very speculative.
Yeah. So it's usually you have to think of it in terms of like, okay, how close to gambling is this?
Mhm.
And so with options though, you can still you can recognize patterns and charts, and I've done that. I've traded before, and yeah, it could work. I just like Forex because it's consistent. It's probably the easiest to learn to trade on.
Okay.
But
I'll trust you on that. So what's the first reason? So then you would use Coinex then for Forex then, right?
yeah, but you can also trade stocks on Coinex too.
Okay.
So you get stock charts and stuff there also. Yeah.
So for Forex trading, then we're trying to look for certain type of pairs. How many pairs should you look? Should you find things that kind of just interest you for more reasons than one? Like I think the British pound, for example, always interests me. I always want to go to
Yeah.
London. So should I just trade because I enjoy it, or should I look for certain type of things? And
Great question. Yeah, so I think it's we have to look in terms of like, okay, as a trader, I don't make money if the market's not moving. I make money when I have opportunity when it's moving.
Mhm.
So I don't want to get into something that's going to be stagnant. So I want to find something that has more volume, that's moving more. So currencies that do more trading, more movement, bigger currencies, like the Zimbabwe, whatever their currency is, versus the US dollar is probably going to be way less volume than the British pound versus the US dollar, so we do trade and stuff. So yeah, that's kind of how I have my list here of all the currencies that I have and my top three. I usually recommend with people to trade like starting off with 5 because you want to get used to each pair. It has their own ebbs and flows and emotions, if you will, just like every individual human does. And so it's good to kind of get to know them a little more. But also there's an idea of paralysis of analysis. We can only analyze so much information effectively each day. And so if we got 1,000 charts, it's going to be a lot harder. So I have my list here. And if we stretch it out, it's actually kind of long. But it includes 1, 2, 3, 4, 5, 6, 7, 8, 9 cryptocurrencies that I don't look at a day-to-day basis. This is just like long-term.
Mhm.
Some of my holdings. And so really my watch list looks like this. And I have 1, 2, 3, 4, 5, 6, 7 currency pairs: gold and silver, oil and Bitcoin. And I don't trade Bitcoin on the short time frames. It's all looking at weekly, monthly charts or yearly charts even.
Mhm.
Oil I trade sometimes. And I gotta follow up this trade.
What broker do you use to place your trades and make your money? Since you do already try to profit.
Coinex.
Oh, everything's through Coinex? Even
Yeah.
like the demo account?
Yep. Coinex, the demo account, the difference between I imagine Thinkorswim's a good program if you do live trading on stock market, but the problem with their demo account is they set it up to where there has to be other people in the demo network buying or selling. So you might try to make a trade, but if literally 0 people are using the demo account, your trade is going to sit there forever.
Mm.
So it's flawed in that way. Whereas Coinex, it doesn't matter, it just has it mirror the market as if you really did a real buy or a real sell.
I like that. That's cool.
So I have more on here than the 5 that I mentioned, just because I like to find things that if something's not moving, like in here, I will usually find something that's moving for
Mhm.
the most part. But also one thing that makes me a good trader is I know when to not trade. I could be really focused and really feeling it, but it doesn't matter if there's no opportunity in the market. There's no opportunity in the market. I need to walk away.
How do you analyze when there's not an opportunity?
Just the pattern recognition that I know that
Okay.
you will get to a point where we'll go through like a whole set of rule, like I'll have a whole set of rules of like, okay, here's mindset rules, how I things that I do, like, okay, make sure that I am in a focus, positive mindset before I start trading. And then one of my rules are, and I have analysis rules, like I need at least 3 reasons to enter a trade as one of my analysis rules. And then I've broken that down to what are all the reasons that we would enter a trade, and have listed out all the pattern reasons that we would enter a trade. So it's just finding if we don't have a chart that has at least 3 reasons to enter a trade, you just won't enter a trade,
Mhm.
which happens a good amount. So yeah, starting off, like this is at most. This is what my chart will look like. Now I don't the color, I don't like organize my lines by different colors or anything. It's just I like different colors, I like to keep it colorful and not boring. So yeah, so that's kind of why I do that. And other than that, these are support and resistance levels, and I'm just like finding the pattern. I'm gonna just finding what the ocean moves in and moves out, the breath goes in and out, the market goes in and out and in and out and in and out. And so it's just finding those patterns, those movements that the ones we can see. When we draw things out, like I have this pink line down here as a support level. Support and resistance is interchangeable. So once it breaks as resistance, so here, it was resistance, we hit it, we bounced down, then we came up, we broke it, we hit it as support instead of resistance, and then we went up. Really important to note that support and resistance is not an exact number ever, never
It's a
ever.
guideline.
It's a box. So we draw this box here, that's actually what the level looks like. Just like we have to think once again in terms of the ocean. Do the waves come in and out? Here's the beach, and just stop at these specific sand grains every single time?
No,
Exactly.
but you have to remember it comes to that same level.
Exactly.
Kind of.
And then the tide changes, exactly. So same idea. So we just have to realize that these are the same type of thing. The wave came in, and this time this wave came in a little farther, but it's still the same area that it stopped. And same thing here. So we can see that I draw mine as a solid line, because if every one of these was a box, you can see how it would get kind of messy. It's just a lot on the chart.
Yeah.
Sorry, almost a lot as is. So I like to keep it as simple as possible. So I'll even hide some of my indicator. My main indicator is Bollinger Bands. We'll get into that later. But this is on average, at most, what my chart looks like is about this. And will make probably 95% of my trades just based off of looking at stuff like this here. So I'm looking at support. How do I know that this was support? Well, obviously the price touched it and went up and it bounced. But then I look at the patterns of, okay, when it bounced, what did it do when it touched this line? So we can see every time it bounced up here, here, and here, we can notice that, look, there's strong wicks, at least one strong wick every time. Every time. Look at down here when it bounced, look, a strong wick, push the price up. So a wick means that in the course of that candlestick, so in this case, we're looking at the daily. So this one specifically, in this day, the price it was pushed down all the way down here, but then a bunch of people bought and pushed it right back up. And so wicks are awesome to tell us, like, basically, hey, where are the buyers or where are the sellers? Because if we can look at the opposite end, and how do we know that this support over here was resistance here? Well, look at strong wicks, touched the line, touched it, we went down, we came up, multiple wicks, we went down. So it's just kind of seeing those wicks, seeing those movements a little bit. There's other patterns, of course, in the candlesticks, the candle bodies. But when we start to see those and notice those, we can start to make a pretty accurate decision. I don't know what's going on. So, is there anything that doesn't make sense here?
No,
Cool.
it all makes really good sense. So, what's next in your process?
So what I would do from here, the next step is I would say, get into TradingView, get into your demo account, start on the free TradingView account, and then start messing around with support and resistance, drawing those, and then maybe making some trades and kind of saying, okay, this level of support, this level of resistance. And so what I would say when I pull up the course for people. 1983. Right. Maybe he's so real slow today. Okay. Opportunities, what is it? Marketing sites. Products. Okay. So I would have you start going into this right here. Get into this. What is trading? All good stuff here. Or yeah, I mean, if you could watch those and tell me what's changed, that'd be great. I'm gonna go through it eventually. But definitely terminology, how to create a demo or a live account, TradingView, how to actually make trades, and then different trading styles. So these are good. And then this is where we get into pattern stuff. So I already mentioned to you support and resistance, and then some of the individual candlestick patterns I was just talking to you about wicks. So yeah.
So what should I be looking for in the patterns in the chart?
So I want you to start drawing support and resistance lines like this.
Okay.
So going to the daily, weekly, monthly. So that's where go into the course, watch the support and resistance video, and then practice that. And so what that is finding these areas where we can see the price bounced from all the way in the past.
It doesn't have to be a straight line too. It can be a diagonal too, right?
Yeah.
No, it has to be a straight line usually.
Yeah. The basic, exactly. If you're spot on. So like beginner, you're going to have them just do the horizontal lines first. And then after they have a grasp of that, then you can be like, okay, like, I got this purple line here.
Yeah.
We can see that they call it a trend line, but yeah, it's a support line still. The price is supported upward. So yeah, it looks like gold sales are imminent.
And then when I'm looking at the price action, right? I mean, I know I'll go over that in the individual course again, but
yeah,
just like again, so I'm looking at this, I'm saying, okay, these two patterns, say these two big ones right here. There we go. Okay, so it ended off here. So what I'm saying is seeing here is that not only was there a high selling pressure, so that pushed it down here and then brought it up here, but this was because this is your bearish candle. It for the bullish candle, it pushed all the way here and then it started here and then it pushed down here, then it came back up all the way up to this point, and it came back down to right here for your bullish candle, and then it continued this bullish trend up here, and then it was started off bearish. And just kind of recognizing those patterns technically.
Yeah, and so that's where getting into these two, the individual candlestick patterns will help a lot with that price action. Like these three videos, getting into this, because it's not, yes, this right here is a bearish candle, but the candle bodies, the wicks tell us where the price was able to go, but the bodies tell us where the price was able to stay. It's cool if you can do, one rep, but if you can just push it up and then your arms collapse, it's like not nearly as strong as being able to hold it,
Yeah.
So that's kind of what we're looking at also is this candle body compared to this one a lot smaller. Yeah, the price went down, but it was pushed right back up.
Hmm.
Then this one overtook it completely. This one ate or engulfed this one
Golden
here.
Candle, yeah.
Yep. And then this one, we had a strong wick on the bottom. And we just kind of kept moving up here. So came up, came down, and then we had this one with some strong wicks at a resistance level. How do we know it was resistance? Because look at last time we touched it, we went down. But then we closed above. As soon as this happens, this engulfed here. Not only did this one engulf this candle, but also it completely overtook what was this resistance level. We're only looking at the 1 hour now. So the support and resistance is a fractal. We can do this on any time frame.
Mhm.
So since it broke above, because it broke above, I could easily buy and expect it to go to the next resistance level. And that's where I can make a trade. But yeah, then we see since it broke above, it ended up going up higher. Yeah, so it's just kind of seeing all that stuff. So basically starting to find support and resistance, then recognizing at support and resistance, how do I know that the price is actually being supported? Or how do I know that the price is actually being resisted? What's happening? When the price gets to this, I drew this line. Okay, the line's cool. I can see how it touched it here, broke through it, touched it here. I can see how it's a level, but how do I know when it gets to those points, when it's touching that line? How do I know that it's actually going to bounce?
And maybe just looking at the size of the wick.
What are the candles look like?
Candles,
Yeah.
okay.
What are the bodies look like? What do the candles look like? And so basically from here, what I would say is based off of just trading, our session ends at, okay, I give you homework. Okay, go draw on 3 charts. I want to see support and resistance lines on 3 charts. Usually I'm going to tell them the horizontal lines.
Okay.
But then we come back and then we'll go into, okay, let's look at the patterns. What does it actually look like when we got to those levels? Let's break it down. Did you watch the individual candlestick pattern video? And a lot of times yes, okay, cool. So let's break it down. And then just go in depth and just basically run through 3-4 charts. But before I do charts, I'm always asking, hey, where are you at? How you feeling? What's up? What's good? I have a ton of mindset techniques that I teach all the time. So I'll teach you those techniques. I also have a PDF on NLP techniques that I'll send you. I teach that stuff. Okay. And so, yeah.
Yeah. One. Oh, yeah.
Yeah. Good place to start. And so we can, whenever you go through that, I always tell people to flow too, especially with you, it's not learning to trade isn't the only thing you're doing. So it's, important to don't force it, especially trading. If we try to force it, we try to do it fast, just like people, a scarce mindset doesn't all just come from money.
Mm-hmm.
You can
come from wanting to get,
I need to get this so I can coach, you know what I'm saying?
Yeah.
But the best way to get it is to flow with it. Mm-hmm. So yeah, so but also you're more motivated than most, so you just do it at your own. If you don't feel like it, I don't feel like studying this, I don't feel like charts right now, cool, it's good. It's actually better. You're a better trader. The best traders know when not to trade. Yeah, so
cool. Get this down, dude.
Yeah, it won't be difficult, bro.
Appreciate it.
You got the mindset for it.
I feel like too, learning. So I'm gonna pick up. So one more question. So how do you decide which pair you want to choose? I kind of asked the question, but I feel like I didn't get the full understanding of the answer to that. So so when I'm choosing my 5 pairs or 5 things I want to look at, I may choose. I'll also probably analyze the SPY, and then I'll look at say I choose 5 of those currency pairs.
Yeah.
Should I just other than looking for volume? Okay, that's my question actually. So how do you determine where the volume is on the chart? I wouldn't tell you that.
Yeah, so the Bollinger Bands show me volume or lack thereof. So we'll learn this later on.
If they're tight, a lot of volume, right?
Yeah. I don't know why I'm gonna reset my computer. It's struggling. Okay. So yeah, when it's tight, that means there's not a lot of volume.
Not a lot. Okay.
That means that, so what these are, first, the line here is a moving average.
Mm-hmm.
So this is, if we look where I can see BB, Bollinger Bands, 20, close. So this is a 20 period moving average based off of the close price. So what that means is that, like I was saying, the end of every candle is the average of the last 20 candles. It's putting a dot that's connected, basically. That's what this orange line is. So every close price. So here's this close price. Here's this close price. So if the dot that's right here is 1, 2, 3, 4, 5, 6, all the way back to 20 candles. The average close price of those puts a dot right here. And this average is, there's so many things we can do with it, learn about it. And the cloud here, these bands, the top and the bottom, these are a deviation. Basically, this is telling us, it's comparing what the difference is between those candles. So as those close prices get closer and closer together, the bands also get closer together, which tells us, hey, there's not a lot of money moving in the markets right now. It's not a lot. So, but the expansion says, hey, we're moving. And so the key is to find the patterns while it's squeezing in preparation for the impulse.
Got you. Okay. So you want it, so right there, you want to catch like the price action on those candles showing that it's going an upward trend.
Yeah.
From that point, and then while it's squeezing, then you want to take advantage of the opportunity because it's showing you that's about to have a breakout.
Exactly.
In which direction. Okay.
Yeah, and the squeeze doesn't tell you, hey, it's going to go up or go down. It just tells you, hey, something's going to happen.
Okay.
So like, notice how we squeezed
That's a
really
big
strong and then we expanded, you know, and even here we were squeezing really strong. We expanded a little bit, squeeze, and then it was way more expanded over here. Yeah, so then we can go out to higher time frames. It's all the same. How we were squeezing so tight down here and how expanded we were over here.
So you don't look at the volume chart that you took off the screen for me? Okay.
No, because on top of that, you know, it's the patterns and the candlesticks. Like this wick tells me that the price was pushed down, but there was a lot of people that bought to push it up, you know, or else it would have been held down. I'm not saying that volume doesn't matter, like directly looking at volume doesn't matter. I'm just saying that I've been able to be profitable without it. Simple.
Love it. So do you have one question? So how do you screenshot like your charts? Because I'm sure like you.
Yeah, I just go Shift Command 4, and it changes the. Come on. See how it changes the thing?
Yeah.
Crosshairs. And I drag the screenshot.
That's for Mac, correct?
Yep.
I was wondering not to do that.
Shift Command 4, yeah, and then you can save it or send it or whatever.
Command 4. Cool.
And then Shift Command 5 is screen recording.
Oh, for that?
Yeah.
That's what I'm looking at. I'm trying to download apps for it.
Yeah. Nope.
Perfect.
Shift
Okay.
Command 5, and then you can change the settings. Do you want to just record the screen? Do you want it to record the screen and your microphone? Yeah, all of it. Where do you want it to save? Computer struggling. Got a lot going on. Okay. I'm gonna stop sharing and Zoom because that's part of it, I think, right now.
Cool. Okay. So